So I think in terms of portfolio allocation, right? So for us, we are purely 100%. We only do 100% equities, 100% stocks, meaning we hold 0% bonds. Just to stay on this point for a moment before I jump into the diversification concentration bit. So if you think about it in traditionally finance, how we're being taught in finance is that between stock and bonds, there's an efficient risk frontier. And efficient risk frontier is a curve that goes like this. But that typically is a 1 year horizon. And so if the efficient risk frontier looks like this, typically what it means is that you should hold, ideally depending on your risk profile, some percentage of bonds and stocks, right? So if you're younger, you're more aggressive, you should hold more bonds. You should hold more stocks, lesser bonds. And of course, if you're older, less aggressive, you should then hold more bonds, less stocks, right? So vice versa. But interestingly, if you actually change the risk horizon of that risk frontier, meaning if you change that to a 5, 10, 20 year, it doesn't look like this. It actually looks like a vertical line. So when it looks like a vertical line, right, what does it mean is that if you are actually holding a stock bond portfolio and there's more bonds, you're actually not you're not actually reducing the risk of the portfolio. You're actually just reducing the return of the portfolio and not actually reducing the risk at all. So the very simple thing is that if you're a long-term investor, you shouldn't be holding bonds because bonds merely just reduce the return risk, the return profile of the portfolio without actually reducing the risk of the portfolio. Now, of course, intra period, right? Any day, any month, you will see naturally a more volatile portfolio. But if your holding period is much longer, this actually is just noise, and we're not here to actually optimize the amount of volatility, intra-period volatility, but ultimately to optimize the end goal outcome that we want, right? Which is to be a long-term investor and to swing, I would say the probabilities and payoffs in our favor. So going back to your question of diversification versus concentration, right? So the way we like to put it is that we tend to own between 30 to 50 plus companies over the long term. We try to avoid what we call uber concentration or very high concentration. What I mean by that is tend to be less than 10 or 15 stocks. The reason around trying to avoid high concentration is just really trying to avoid the high probability of getting hurt if we get something wrong. The most important thing is that sometimes we have so high confidence about one stock. Actually, we really never really know for sure that we really actually know. And that's the thing that actually most investors don't come to realize, right? Is that we never know for sure. You think you might know for something, but you actually don't know for sure. Yep. And that's one lesson if we have not learned after being invested for many number of years, that's the biggest lesson, right? So like I give you an example. If you look at the last couple of years, right, we have had a number of fund investors, for example, trying to own Carvana, for example, right? They were very, very bullish on Carvana or even C Limited, for example. And you've seen them take very large positions in those, and their funds actually got wiped out quite badly, right? So to be honest, they were actually high. The similar teams where they were high concentration, meaning less than 10 stocks. And in these companies, they thought they were right, and they got it very high. And then when it got badly hit, and it was down 70, 80, 90%, the overall fund was badly hit. So we really want to avoid such a scenario. And also, one of the biggest things is that also we realize is that when you own a highly concentrated portfolio, when these positions become big, you end up having to trim them. So one thing is you end up having to trim your winners and reallocate that to your second and your third and the fourth winners, right? Which is a bit funny, right? You don't actually let your winners run, and that becomes quite problematic.